Hey guys, and welcome back to Inside Investing, your go-to channel for demystifying the world of finance. And today we have a very important topic to discuss with you, which is dividends. If you're new to investing and want to understand how dividends work, you're in the right place. Let's go. So, what are dividends? Well, simply put, dividends are a portion of a company's profit that are distributed to its shareholders. When you own shares of a company's stock, you become a partial owner of that company, right? As an owner, you may be entitled to receive a share of the company's profit in the form of dividend. Dividends are usually paid out regularly, often on a quarterly basis, although some companies may pay them annually, and some even monthly. The amount of dividends that you receive depends on the number of shares, of course, that you own and the dividend amount that's being declared by the company itself. If you also want to start investing in dividend stocks, then don't forget to like this video and subscribe to our channel to stay updated on our tips on creating your own passive income stream. There are two main types of dividends. You have cash dividends and stock dividends. Cash dividends are paid out in the form of cash, typically deposited directly into your brokerage account. Stock dividends, on the other hand, are paid out in additional shares of the company's stock. Cash dividends provide you with the immediate income that you can choose to reinvest, for example, or use as you see fit. Stock dividends increase the number of shares that you own, but the overall value of your investment remains the exactly same. Now, let's talk about the dividend yield. Dividend yield is a percentage that represents the annual dividend payment relative to the stock price. It helps you gauge the income potential of a stock or an investment. To calculate dividend yield, divide the annual dividend per share by the stock price and multiply this by 100. A higher dividend yield indicates a higher income potential, but it's essential to consider other factors like the company's financial health and sustainability of the dividends. Dividends offer several benefits. First, they provide a steady stream of income, making them particularly attractive for income-oriented investors, such as people that are retired. Dividends can also be reinvested, allowing you to take advantage of compound interest over time. Additionally, dividends can provide a cushion during market downturn. Even when the stock prices fluctuate, companies that consistently pay dividends can offer stability and potential returns, helping you weather market volatility. When evaluating dividend-paying stocks, there are a few factors to consider. First, look at the company's dividend history. Has it consistently paid dividends over time? A track record of regular dividend payments can be a positive sign. For example, as you see now on screen, we've got the S&P 500, but also the VWRL, which both pay out dividends. And as well, now currently on screen, you can see that Coca-Cola has also been paying us dividends for quite a while now. Next, examine the company's financial health. A company with strong financials and stable earnings is more likely to sustain its dividend payments in the long term. It's important to note that not all companies pay dividends, especially those in the growth phase. Some companies may choose to reinvest their profits back into their own business for expansion. It's essential to understand your investment goals and align them with the companies that match your desired income strategy. To wrap up here, guys, dividends are a way for companies to share their profits with stakeholders. They provide income, potential growth through reinvestment, and stability in uncertain market conditions. Consider your investment objectives and evaluate the company's financial health before making a dividend-focused investment. That concludes our video on dividends for beginners. I hope you now have a better understanding of how dividends work and their potential benefit. Remember to do thorough research and seek professional advice when considering dividend-paying investment. If you found this video helpful, be sure to hit the like button and subscribe to our channel for more valuable content. Thanks again for watching, guys, and we'll see you in the next one. Let's go.